Today, let's get into a market rally. Could it be impending over the weekend? We'll break it down for you. My name is Paul Barron. Welcome back to the show. I do want to thank our sponsor, and that is Coinbase, a place where you guys can get into crypto, maybe for your first time, or if you've already been in crypto, there are some tricks up their sleeve. So check this out. First of all, when you register over in Coinbase, you can do this as a business or an individual. You can get up to $2,000 when you buy on your first trade. So check it out using our link down below. It's going to help us and, of course, get you guys into the crypto game. One thing that was a piece of news today that came out that was kind of interesting to me is this announcement from Morpho on Coinbase, where now Morpho is doing lending. So you guys have talked about lending, but most of the time it's you taking out loans. Now you can actually lend your USDC out to others for borrow. So now you have lend and borrow, all available over on Morpho inside the Coinbase app. Check it out. I'm blown away by that in terms of what they're paying on USDC to get going. PCE inflation came in. Fed's preferred inflation measure rises to 2.7. This is in line with expectations. That's why I think the market was a little bit soft on it, and why we might be seeing a little bit of an uptrend here right now in the markets as we close on Friday. Other things that are happening, of course, is still quite a bit of pressure coming in from the Trump administration over on Chair Powell. And this is all in relationship to, he wants higher cuts, basically, is what Trump's after. But I think we are in for 2 more quarter basis point cuts coming in toward the end of the year. If you look at Polymarket, you can kind of see it right there, holding in at a 25 bips, about 81% probability. So looks like this is going to happen in October. And this is the end of October for that FOMC meeting. So just to let you guys know, October could be a bit of a volatile market because there's still a lot still pending for what we'll see in the market structure. Because remember, we got a shutdown potentially looming here. And if you look at that, there is other things that are playing into this. One is the dollar index jumping after a strong economic data dent. This, of course, could cut rate cut hopes. And I think this will play into how Chair Powell actually pulls the trigger in the next 2 FOMC meetings. Let me go to a clip real quick because this kind of explains it a little bit more. Take a look.
Some of the narrative around this is that, the dollar really hasn't been able to break lower, even though we saw US yields kind of crater in recent weeks. And therefore that kind of an asset which can't go down means it's probably ripe to go higher, the short-term market. What's interesting now is what that means for other assets. I think it could finally mean it's time for gold to have a short-term correction. Does it mean risk off for stocks? That's where a bit of the debate is. My view would be this is not necessarily a risk negative catalyst more broadly, unless it's a very fast or quick dollar bounce, and that doesn't seem to be the case at the moment. So you're looking for external risks to have to be black swans, which means we can't predict them by definition. Now the other chance is an internal dynamic, as in just the price becomes its own self-fulfilling narrative. And that's what you're kind of seeing a bit in crypto at the moment. You're getting a little bit of shakeout in some of the alternative coins because they just went too far too fast. Maybe that spills over to some of their assets. And that's where the dollar story comes into this, because if you get a bit of a dollar bounce fueled by people looking for a new theme to play, and the fact that yields may have bottomed for now, and the fact that we've got month-end rebalancing kind of feeding it, maybe that could feed through to other assets. But I'd be reluctant to put too much kind of conviction on that idea that we're going to get a self-fulfilling price-led move, which means your base case has to be that the current trends continue for now until we see that external catalyst.
All right, so external catalyst, everybody's looking for that. One thing that everybody is asking us, and that is, have we topped? Is this a signal that we've started to top out on both crypto markets and also maybe on the S&P 500? Gold, as he just mentioned, all-time high. I want to go to Mark Newton because he talks about not only the PCE data that's coming in, but he also talks about the government shutdown. Take a look.
Look, I think the consumer has proven pretty resilient throughout all this. Look, the spending numbers are much better than expected. PCE data is in line. I don't think that causes the Fed any sort of concern. Most of the things that people think are going to cause really issues with the market really haven't materialized. That being tariffs, that being inflation. That's one thing to really, continue to pound the table on. Even with regards to a potential government shutdown, we look back at 2013, 2018, most of that has been really short-lived. It's not really anything materially that ever causes a serious sort of sell-off, and normally that's resolved. So.
All right, so shutdown, I think it's going to happen. I was on with some guys in DC this morning, and they were all leaning in on that this most likely will occur. In fact, Polymarket showing a 70% probability that we're going to get one by October 1st right there. So that in itself, and if you thought, well, let's go in and do a little research over on Perplexity to see what kind of S&P performance that we've had over government shutdowns in the past. I'll throw out the 70s. But if you go in here into the 90s and into 2000s, really the 2013, 16 days out, we basically had a little bit of a push upward. January of 2018, 3 days push upward. And then even December and January of 2019 had a 35-day shutdown. That was the biggest. And that actually, the market went up 10%, so plus 10 points. So I think the point here is back to what Mark was saying, is that this is probably not going to have much of an effect on markets in general. And I think maybe the crypto market might follow along on that. All right, so you guys have been asking, is this the top? Are we frothed out? Are we going to see a little bit of a sideways action and slow down movements? Mark Newton of Fundstrat, which remember, this is Tom Lee, pretty much the king of ETH out there right now. He breaks it down in this interview right here. Take a look.
Your colleague, Tom Lee, says it's too early to call a top because of all of the things that you're looking at technically, Mark.
Yeah, correct. Good morning, Maria. Look, Tom and I look at a lot of the same things, and technically we just haven't really seen sufficient evidence to think the market's beginning any sort of larger seasonal correction. I mean, we've seen a 3-day pullback now. It's fallen in the line with the traditional seasonal period of Rosh Hashanah to Yom Kippur, and I've studied that data going back since 1950, and we do tend to see weakness to the tune of about 0.7%, and thereafter we almost always see a very strong rally. So, but for the time being, pullbacks, if they persist over the next couple of days, there's still going to be something to really look to buy dips and thinking markets press up into right around 6,800 or so into mid to late October. The economy's come in quite strong of late, and so it's actually reduced the number of rate cuts between now and year end. We have about 1.5 now priced in by Fed Fund futures, still about 4 between now and next summer. Obviously, they're expecting 0.3%. We'll see what comes out.
All right, so just remember, guys, Newton also was the guy that called the local bottom on ETH at around 42 to 4,100. ETH, of course, slipped in under 4,000. So let's just assume that, there was a little bit of an adjustment there. So maybe they're still on track here in terms of their predictions, and specifically talking about Tom Lee and Fundstrat, because they've been on point pretty much with Bitcoin and obviously now with ETH, and very involved in the ETH ecosystem with Bitminer. If you compare a lot of what's happening in the market to the dot-com bubble, this is back in the late 1990s and in 2000. Remember that push up had several legs in and out. And is this the area where we are right now? This is the current chart compared to the dot-com bubble that occurred when we saw the 2000 starting to slide, and I think it was almost 7 to 8 trillion came off the market cap of the S&P, with mostly a lot of this high-end froth business that came out of the internet era. If you look fear and greed, we have almost retraced the entire summer. And look at this right here. We're at 32 right now. Last time we were at 32 right there was in April. So granted, we kind of dipped right there in June, but it was 37. This is a full retracement down on fear and greed. If you look at the traditional markets right now, neutral. And remember, 1 week ago, we were setting it still on greed. So they are responding to this right now of where the market is. Many analysts are very split on this, is that they're still on the upside, whether you think about what Fundstrat's doing, or you look at 42 macro with Darius, or you look at some of the other analysts that are kind of going the other direction and saying that this is actually the end of this market. Other things that are playing into this, crypto market extends losses on Bitcoin exhaustion signals, and I think a lot of people are in that framework right now. Many of the top 20 assets by market cap are seeing double-digit losses this week. Prices are drifting lower. Many people would say, well, is this still a good time to get in when you see these kind of retracements that are going back? If you look at not only that, but also how Bitcoin could potentially go below 100K, which right now it's still a little bit high. I would say that this is probably low probability at 57% that it does dip under 100K. But if it does, expect some pretty significant altcoin bleeding overall. One other thing to consider here, as we've seen some significant liquidations over the last 10 days, and it's been multiple, so, and all-time highs in some cases. So this is something that, of course, gets into that psychological effect, because a lot of people, you know, as they say, paper hands, they'll start to exit the market thinking it's all over. The holders and the people who have kind of the intention of where this is going, who double down on some of these prices, maybe they are the ones that win here in the end. Other things you could look at, of course, is the Bitcoin ETFs. Another 258 million in outflow. ETH bleeds first 4 straight day. So is this kind of leaning into a major crash, or have we finally hit the bottom here and started to see a little bit of a recovery over this Friday going into the weekend? Take a look at the ETF chart. You can kind of see, typically when we've had these low zones, we get these big spikes back into it. And this, of course, is the Bitcoin ETF. And here we are, low zones. And then you could take a look with Ethereum, has a lot of the same similarities. Here's all these low zones right here of inflows, and then boom, we get these big spikes. What we've been doing here, are we on a reversal setup here for where ETH and the ETFs could be going for sure? With this being the case, the market always has winners. There's always an alternate trade. One of them that we've been watching for a while has been silver. And the setup has been outlined. We've outlined it on our channel a couple of times. We had Andy go back and just search the silver video a couple of weeks ago. We called this in the sense that this is getting ready to really offset against gold, and silver could see some significant moves. And the target price that everybody's looking at, if you look at the future side, is around $50. And if it hits that, many people are saying that's when it becomes blue sky. We don't know where it would go from there. Right now, it's edging it out. Right now, we're looking, of course, at the futures right there. And also, whether you go into the ETF side over on BlackRock, all of which have been up. So this could be another one to kind of consider. One last thing I want to hit on right here is Peter Schiff. 2 days after this post, silver broke $40. That was the big point that everybody was looking at. Today, less than a month later, silver traded above 46. That's a 15% gain. And then just $4 left to ride to validate his forecast that we would see a big move to $50. And that's exactly the number that Andy Schectman called 2.5 weeks ago here on this show, is that watch for silver to break above $50. One last thing to kind of consider is just the framework of the growth in this market. One of the big participants that has not been active has been Tether. And here's Tether's potential $20 billion run to get a funding round. And they're drawing in SoftBank and ARK as backers. That's a big deal. I mean, when you draw in SoftBank, you have arrived at at private capital and where we will see investment to really strengthen up different kind of projects. Whether you look at OpenAI, you look at Tesla, you look at all the different investment opportunities that have been in the market like this. ARK, SoftBank leading the way. Could Tether be in the right place at the right time as the market starts to heat up? Institutional capital coming in, liquidity needed in the market, and a stable coin, USAT, now getting ready to be regulated here in the United States. A lot happening, guys. Make sure and get in on the Diamond Circle. It is our free group. You guys can join for free. Just click the link down below. Follow me on X @Paul Barron. We'll catch you next time right here on The Paul Barron Show.